Hello, my name is True Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Hello, everybody. This is True Demon, the Devil's Stockbroker. Just giving you a quick update on the stock plays that we had from the other day. First up is IRNT. This was a swing trade that we got into on speculation of a cybersecurity attack. There seems to have been a good uptrend going for us for a while. We've formed a bit of a wedge and have broken down below on the short term. However, I think we're about ready to establish a new level of support here at the 455 level. So I'm going to be staying in this trade just to give everybody an update on what I'm planning to do here. I see a good level of support here that I'm basing just off of the volume shelf. So as you can see, we've got a heavy level of support here directly underneath the 455 level and several areas of heavy volume below that. So I'm not thinking we're going to break down this below this anytime soon. I'm looking for a bounce right here, so would make a nice entry right here at 455 if you're late to the party and looking to make an entry on IRNT. There has been speculation and also news that China was in state computers. This was announced last night. So there's going to be some heavy push for cybersecurity stocks, I think, in the near term. If you're not looking for something that's as speculative as IRNT, you might try other stocks such as FireEye, CrowdStrike, or some other infosec firm. There's plenty to choose from. Cloudflare also seems to be doing pretty well in the long term, so you can check out some of those. Now, on to the star of the show, MULN. I know everybody is looking for this one to make a big move to the upside, and I'm sure everybody is wondering to themselves, TD, why didn't they have to cover? Why didn't this move up massively? Just because, and I've had to say this several times, FTDs can be covered with borrowed shares. Okay, this is part of the can kicking that happens with these stocks, especially if market makers over leverage themselves. If they use a lot of short exempts to cover on the way down and try to keep the stock pushed down, then what they end up doing is failing to deliver on those which they didn't locate. And if they get themselves into a bind and they can't cover at a preferred price, they will go out, they will find a lender, they will borrow shares, and they will deliver those in lieu of the FTDs to close them. However, this does add to their net short position, so eventually the market maker can get themselves backed into a corner, okay? This is what we want. It is what we're going for. This is a bit of a patience play. It can go up in the short term, and as we're establishing higher levels of support, which we can establish from here to here and to here, between the 55, the 65, and the 75 level, those are just several areas of support. And now that we are getting close to the end of this big wedge here, we're looking for a breakout either to the upside or to the downside. However, if we look at the volume shelf, we're likely to find that there's a bit of there's not nearly as much ceiling above us as there is floor below us. A lot of trading has occurred at this $1 level. It's a very solid area of support. Very, very difficult to break down below this. As long as people hold on to their convictions and stick to their guns, then I don't see any reason why MULN should break down below. It may break below the $1 on the short term, but honestly, I'm not really all that worried. Now, even though they didn't have to cover today, that doesn't mean that they won't have to cover in the future. So really quickly, I'm going to show you the Ortex data. We'll take a look at that and see what Ortex shows. As you can see, just based off of what the price has done recently, Ortex is showing that a massive amount of borrowing, covering, and borrowing again is taking place here. Okay, This is the market maker moving in and out of positions, trying to get out of that net short position that they put themselves in. As a result of using even more short exempts and the price moving up against them, they've backed themselves further into a corner. We're back up to around 30% of the free float being sold short. And if the price continues to make moves upward, then that's going to put the market makers in an extremely dangerous position. Those 22 million shares that were sold short exempt, yes, that's still a thing. Did they cover it? Probably not. They probably used borrowing in order to close those failures to deliver, but that means that they took a net short position. That's not ideal for a market maker. Market maker does not want to stay in a net short position. They want to get in and out of their trades in seconds. Now they're holding on to it for days and they're stuck in it. Currently, we're not on the threshold list. We're still waiting on failures to deliver information to be released, but I'm willing to bet that if we can continue seeing this climbing further and further up, if the price continues to make moves up towards that 250 strike before the mid of March, then there's a good chance, very, very good chance that we see market makers throw everything that they have at this stock. And if retail refuses to sell at a lower price, if you refuse to sell for a loss, then it's better for everybody. This is a buy and hold strategy. Let's just compare a couple of other data points just to drive home the point, okay? Before we started trading at these higher price levels, the average days on loan were 37 and a half days. Now, since we hit these higher prices, the average days has been less than 3 days holding these short positions. That's phenomenal. That shows that shorts have thrown everything that they had at this stock, all diving into their same position at this sub $1 level and at between $1 and $2 heavily. That's a phenomenal thing to see, because the upside for the shorts at this price level, the stock can only go to zero. There is such limited upside for the shorts at this point. They are literally trapped at the bottom of the floor. This is ground floor level shorting. It's extremely dangerous for them, especially when you consider the float size for this stock and the opportunity for this thing to move exponentially compared to where it was sitting just a few months ago. Also looking at the utilization, notice the stair-stepping pattern as utilization continues to climb consistently higher and higher, okay? We're basing at around 92% utilization. That's likely to change here in the near term. They're going to continue looking for shares to borrow in order to hold on to these. This is something for retail to consider. You may want to help yourself out by not lending your shares out. If you want to do that, you should call or talk to your respective broker, look up what their short lending policies and practices are, and find out how you can disable short lending. That way, your shares can't be borrowed and used to short the stock against you. That only hurts your position. Yes, you make a small fee off of the lending, but honestly, to me, not worth it, especially on a play like this. And you'd be surprised how many people are lending out shares out of their portfolio without even realizing it. Something to consider, okay? The fewer shares that are out and available for lending, the harder the stock is to borrow, the higher this cost to borrow average goes, and the harder it is for shorts to find more shares. And the harder it'll be for the market maker to negotiate a net short position and find more shares to borrow in order to push the stock down, okay? That will continuously back them into a corner. Right now, the stock trading at a phenomenal level. To see this thing at $1.20 and just holding consistently is a beautiful thing. Please have patience, okay? I know it's a hard thing to do. I know that people want to see this thing moon tomorrow, and it doesn't matter how many dates I set. I'm not setting a date for the squeeze. I'm setting dates for when covering has to take place. And there are many ways to cover, okay? So I want to be explicitly clear about this. Failures to deliver can be covered with borrowing. It doesn't have to be purchased out of the market. As long as there are shares available to borrow on the stock, then whoever is failing to deliver can borrow those shares, okay? And as long as they have the liquidity to hold that net short position and pay those fees, then Well, they can hold it for as long as they want or are willing to take those losses. Taking away those lendable shares, continuously buying more shares, keeping the price averaging above $1 will all be beneficial for bulls on MULN. Just to further illustrate the point, I'd like to point out the difference between the estimated short interest versus the estimated free float on loan, okay? Now, short interest is shares sold short, right? There's a lot of these shares that are currently on loan. That includes those shares which were borrowed to close failures to deliver. Look at how high it is. 50% of the free float is on loan. That means that either shorts are preparing to sell a whole bunch of shares short out of nowhere, which is entirely possible. We have to be prepared for the possibility of downside, and we have to be realistic and set our expectations. However, we also can take this as a sign that market makers are using these shares, these borrows, to cover their failures to deliver. This is evidence of that thesis. So pay close attention to these numbers. Take note of it. The fact that 9.92 million shares are out on loan and only 5.87 million are sold short, that creates a difference of roughly 4.1 million shares that are still held in borrows. All right. That's a lot. That's a huge discrepancy and a huge difference between the shares that are sold short versus what's borrowed. And it doesn't make a lot of sense to hold a share out on loan without shorting it. So either there's going to be a big push to the downside in the near term, or they're waiting for a big push to the upside for them to hit it at the top. Or, third option, they're being held so that they can cover inevitable fails to deliver that they're expecting to have to cover on. Okay? So these are all equally plausible possibilities that we should be prepared for. If we continue to see upside in MULN and we continue to see retail buying and holding, however, it only means good things. And this is one of those situations where if the little guys hold together, if all the ants build that build that ladder together, we will rise to the top. Okay? It's just going to take patience, it's going to take effort, and it's going to take a little bit of a gutsy, risky move. That's all I got for you guys today. As always, none of this is financial advice. You should always do what's right for you and understand your risk and your risk tolerance. So please take what I've just said, what I've given you, with a grain of salt. And of course, I'm long on this stock, so I have my own biases. Do your own due diligence and do your best to make the market work for you. That's all I got for you guys today. I look forward to seeing you next time.